Hey guys, welcome back to Rumi's Life, or welcome if you're new, and today I'll be talking to you guys about taxes. This is Taxes 101, as in this is for intro. This is like a little introduction. So let's just dive right into it. Like, we don't have time for um, long intros, but this is your 2019 tax brackets for your federal income taxes. Notice I said federal, so some some people are like, oh yeah, I filed my federal taxes, but you haven't filed your state tax. State and federal taxes are completely separate. I mean, sometimes you can file them together, but you have to note that and some people will come up to me and say, "Oh, I already paid my taxes, but you only paid your federal tax. You haven't paid your state tax yet." So these are like, imagine this, like you have two different family members. Like, one's your federal income tax, which is your uncle, and one's your state tax, which is your aunt. Like, you still have to pay money to both your uncle and your aunt. You can't just combine them together just because they're family. Yeah. So you have to note that. But for federal taxes, this is your income tax bracket, and this is actually your after your adjusted gross income. So after you take that deductions. Oh, another common question I get is what is deductions versus what is tax credit. So a lot of times, okay, so deductions are, it lowers a person's tax liability by lowering taxable income. So for example, if I make 10,000, I mean like, oh, and so for example, if I make like $12,400 and I take that standard deduction, then my adjusted gross income is $0. Yeah, because this is the money that you calculate here. And okay, and that there's a difference between standard deductions and itemizing deductions. So because of tax reform in 2017, you see, this is the side-by-side check. As you notice, the standard deduction is almost it's like almost double the amount of what it was in 2017, because this is to encourage people to take that standard deduction rather than itemizing it. And that's why like in like 2017, a lot of people like contributed to like charity, got some mortgage, stuff like that. But now with the standard deduction, most people will get the standard deduction because it's pretty beneficial, not gonna lie. But the higher you go, the more money you make, the more likely you're gonna have to take that itemized deduction so you can lower that adjusted gross income. But this is something that's also important for independent contractors who can manage their own money. Like, some people really want their adjusted gross income to look low so they don't have to pay taxes. But if your AGI is low, then you can't get any loans because they think you don't make enough money. So you have to find that balance between making enough money, like showing up enough AGI, versus not having enough. So that's something fun. Like, I feel like I can talk forever about this topic. So let me just go back to what we were talking about. Oh, deductions. So yes, some of the popular itemized deductions are obviously like charity, interest on mortgages, stuff like that. But I mean, it's pretty good, not gonna lie. Oh, another thing is like for qualifying widower, which is like so if your husband dies within 2 years, you can still take the $24,400 tax deduction, which is so nice of them because you probably went through a lot that year in that upcoming years ahead. So the government tries to like give you a little bit of wiggle room to get yourself back together. So if, like for example, my husband or my wife passes away, then even though my income didn't change, I can still take that $24,400 deduction. So if I make $30,000, my AGI is only going to be 6,000 or 5,600, which is very nice. But I mean, it kind of sucks if I don't know. I feel like I'm talking a lot, but yeah, basically that's it. And oh yeah, I told you guys I had to take the exam, and I don't know why, but they thought the legally blind and being over the age of 65 was pretty important because I was tested over it multiple times. But this is one of those standard deductions for example, if you're legally blind, if you're single or head of household, then you can take that $1,650 on top of that standard deduction. So you can actually really adjust that income Okay, so let's just, oh, and what is a tax credit? Let me see, my brain's like, ooh, because I love talking about taxes, but what is a tax credit? So tax credit actually lowers the amount you owe to the government, or this is how you can get a lot more refund. For example, like a popular one is a child credit. So if you have a dependent or a child, you have to go through the rules. The rules are pretty complicated, not gonna lie. So I think you can take up to like $2,000 tax credit. So that means after you calculate using your AGI and let's say you owe like $10,000 in taxes, the tax credit is gonna lower that tax balance by $2,000. So you only end up paying $8,000. As opposed to a standard deduction, what it does is it takes that amount that you owe. I mean, it takes your income and it lowers that income. So the tax credit definitely has a lot bigger impact than a tax deduction. Does that kind of make sense? Because if you're on that verge of like between a certain tax brackets, like for example, like you're like only like $500 away from being in that 12% tax bracket, then it's going to lower that tax down. But other than that, it doesn't really have as significant of a impact as a tax credit. So yeah, these are like some of the notes I took from that class or from that book, the exam I took. And I think it's definitely interesting. Like if you go to school, you can take that as a tax credit as well. There's a lot of education tax credit, a lot of child tax credits. I can't get too detailed into it because, again, we want to try to keep this simple. Okay, let's just dive into the basics. Like I was saying earlier, like in order to you take that after you take your standard deductions and stuff, deductions, if you itemize deduction, if you choose to take itemized deductions, then you take that income and you have to see what tax bracket you feel. Actually, let me just do an example. I think that might make it a little bit more clear. So let's say I make like 40K. Then that would put me at the 22% tax bracket. Again, I'm only paying 22% on an amount over $39,000. So let's say, so you're actually only paying 10% tax on the $97,000, right? Actually, I forgot that multiply sign, right? And whatever's over that 97,000, that's when you're paying 12%. And it has to be below $39,000. So between 9,700 and 39,000 is where you're paying 12%. So this minus the 97,000, this times 12%. And whatever your income is, whatever's between that income and that tax bracket that's when you're paying that 22%. So this part is 22% tax, and this is $40,000 because that's my income that have enough zeros minus this amount. So I'm only paying like about like a little bit less than like $600 is taxed at 22%. Well, yep, I did definitely have an extra parentheses there. So my tax, if I make like 40%, 40K, would be $4,658. As you notice, this is only actually 10%. Yeah, it's like 12% or 11.65%. So it's not even though I'm in the 22% tax bracket, I'm not actually paying 22%. I'm actually only paying 11.65. And similarly, if I make like 300K, let's say I make 300K, okay? And that's going to put me at that 35% tax bracket. Yes, yeah. Then, same thing. I have to, if it's less than 10%, if it's, okay, I pay 10% tax, whatever's between 0 and 9,700. You're probably like, this girl's crazy. And it's true, I am. So you guys are right. And for the second What's taxed at 12%? Well, that's the difference between this minus this, because that's the gap, plus the 22%. Right? Yeah, that looks right. And then I pay 32% or 24% tax on whatever's over 84,000, but whatever's less than 1,600. Yeah. So this, whatever's this, and I pay 32% tax on whatever's over 160,000, but whatever's less than 204,000. So I pay 32% tax on whatever's over this, but less than this. Yeah. Plus, so my income I said was $300,000. So I pay 35% tax on only the income above 35%. So $300,000. Do I have enough zeros? 1, 2, 3. Yeah. I paid $300,000 on only like a little bit. So then I would pay $80,000 in taxes, which that's pretty significant, but your income's also pretty significant, so I guess it makes sense. So let's find this out. What percent is it actually? Do I have enough zeros? Nope. Do I have enough zeros now? Yeah. So this is actually equal to 26.73%. So you're not paying, even though you're in the 35% tax bracket, you're not paying 35%. I hope that cleared some confusion. And if it confused you more, okay, well, sorry about that. We got this. But if you have, make sure you leave them down below. Otherwise, make sure you like, subscribe, and share. Bye!